Hey everybody, it is Brian Shannon here from alphatrends.net. Thanks for tuning in. It is Wednesday, the 31st of March 2010, and the market's closed here, so we're going to take a look at where we are. Let's pull up the spreadsheet and just kind of show you where we are for the quarter and for the year. Obviously, the quarter and the year are the same thing, obviously. The S&P 500 for the first 3 months of this year up about 5%, as was the NASDAQ. The Russell did outpace the rest of the market, and that was a trend that was pretty consistent throughout the quarter, up 8.58%. And another trend that was consistent throughout the quarter was the semiconductors, which lagged, and they closed down 0.18%. Financials were the strongest group, and then we had the Dow and up about 5%, 4.5%. Oil came back here last couple weeks and is starting to move higher, and the real estate, commercial real estate, is also doing very well. So commercial real estate up 8.4%, and the retailers also had a real good quarter. And let me just go back to that for a moment because I wanted to talk about gold and the dollar were both up a little bit. So anyways, we've had a strong bullish trend. Obviously, it didn't start out that way. We had the first part of the year we had a little bit of strength. We broke support, and a pretty strong sell-off actually ensued. But when we looked at the weekly time frame on the S&P 500, we were obviously still in a primary uptrend, but the primary uptrend on the weekly time frame did experience a stronger pullback here on the daily time frame that got us below that 50-day moving average as well. So we had seen February make some lows on big volume in here, and a lot of times that's what you see is the big volume comes at the end of a move as it becomes apparent to most people, and you get a large amount of emotion in the market is basically what that reflects. Now we've been keeping an eye on this trend line from those February lows, and you can see that it was basically broken today, more through time though than price. The market actually was down 40 cents today. It was a kind of a volatile session once again. We did start out with a gap lower here today, and a little further sell-off. The market recovered nicely, and then let's switch to the 1 minute time frame. You can see late in the day we did have some further weakness. So we had a volatile day. The last couple of weeks we've been pretty much range bound here. You can look at, the majority of the trading has occurred really within this 1 point range of 116.50 to 117.50. We've only had basically a couple hours of trading outside of that range over the last 2 weeks. So it's been a pretty quiet market. There's been some really nice moves in the individual stocks, and the way we have to look at it is that the market is in an uptrend, so it's innocent till proven guilty. But of course, there's always going to be pullbacks and time corrections along the way, and that's what this appears to be, is more of a time correction than anything. So 116.10 is an important level. We'd seen 116.60 over the last week has been important, and that was tested once again today. And as far as resistance goes, 117.50, if the market can get back above there and hold above there and actually take out the highs of Tuesday just under 118, then I think that the uptrend on the daily weekly time frame rather should be able to continue. And if it does continue, then what we'd be looking for is, again, this Fibonacci level, which is 2/3 retracement of the 2007 highs to the 2009 lows. So when we look at that, what we have is this is the 61.8% retracement of this downward move, which gets us back up to this prior, basically the scene of the crime. That is where we had the bigger breakdown occur near 123, 122.5, 123. That looks like where the market eventually is headed, but it seems to be tiring here a little bit. A tired market doesn't mean it needs to go down. Again, markets can digest those gains through time, or they can pull back in price. And so far, we're looking at a market correcting through time until we break some of these important levels, in particular 116.10, and hold below it. If that was to occur, then I think we'd be looking for the next move down to 115.10. That's where we had support a couple times and was prior resistance earlier in the year. So the market's off to a good start for the year when you look at the 3-month returns. Obviously, after February, it was or after January rather, it we had a completely different look, and a lot of people were looking for this market to cave in. It's held up well in the S&P 500, and so has the Nasdaq. The Nasdaq, in fact, has done slightly better, as we know. We've seen that the bigger level of that is the January highs are pretty far away here in the Nasdaq. So if we were to get a pullback, we could experience a pretty deep pullback and still not do any damage to this bigger trend. It is, somewhat of an extended trend. Obviously, the trend line we've been focused on here, the what represents basically the essence of trend, has been connecting these lows, and you can see we're once again touching on that. So the S&P 500 and the Nasdaq are basically right on their more important uptrend lines, and that's just basically a time to say, if we get a breakdown through there, it could do some psychological damage and bring us down to the next potential levels where we'd expect to find support. And for the Nasdaq, that's about 47.70, and then below that down here at about $47.25. So those are the levels, and one more level here would be these, that these prior lows would be where we're looking for the market to show a little support. We have what looks like a very short term, at least, lower high, but getting back up through 48.50 and holding back above that level, in actually 48.60. Getting up through 48.60 puts us into new high territory, and obviously we look at the weekly time frame here on the taking a look at it horizontally where we are. This market could continue up towards that $50 level is something that seems realistic to me, at least. The Russell 2000 is also, let's draw a horizontal line straight across to just kind of give it some reference as to where we are. I think we could still see it move up towards 70, and if it handles 70 well, then you could see it even up towards this high end near 75. The fact is, we remain in an uptrend. Near term, it's turned more neutral. Here's the bigger, more important level that we want to see hold at about $66.70 for the Russell 2000, because breaking that would likely bring us back down to about $65 a share at the January highs. Right now, though, again, we look at the weekly, or I'm sorry, this is a 65-minute time frame. It seems as though, just again, it's more neutral than anything, and maybe some lower highs. We want to be aware that if we break this first level at about 67.50, then we're probably headed down for a test of that 66.70 area, and we'll have to take it on basically on a day-by-day basis from there. But the primary trend remains higher, so these consolidations generally resolve themselves in the direction of the primary trend, which is, of course, is higher. Now today we did see a little bit heavier, just going back to the S&P for a moment. We've seen more of the heavier volume days occurring on the days where we get a red candle or a negative close, and that was again today, although it was more average volume. It's the heaviest volume we've seen this week, so that's the only reason that I pointed out. Overall, though, again, these markets, we still have to give them the benefit of the doubt and be aware of those little clues that say, hey, maybe the sellers are getting a little bit more aggressive, but as it gets down to prior important levels, the buyers do show up once again, or the lack of heavy volume on any push through support indicates that the sellers just aren't willing to do damage with their selling. They're willing to do a little bit of a distribution up here, but they're not looking to push this market lower and do damage. The semiconductors, here's the essence of their trend, which would be this trend line right here that comes in. I think this the lows from last Friday near about 27.60 are more important near term, and then as we've been focused on in the semiconductors, we have what's been an important level. Let's look at the 65-minute time frame. Is this 27.20 to 27.40 level? This was a reason for concern prior, but we did hold a higher low in that area. So the market, really, the semiconductors just kind of turning sideways in here after hitting a new high for the year last week. And the weekly time frame, you look in here, we still have a healthy looking picture to this market overall. Here's where we have the highs, and getting up through there. I don't think it's unreasonable to look at this market as having the potential to get up towards 30 and a half, $31 a share. So financials also continue to hold up well. Looking at the weekly time frame, you can see we had broken that 1570 and 1540 level. Those are more important levels of support, in particular 1540. But we continue to hold up in this weekly time frame. Looks like it should be able to continue higher, but if it starts reversing, have an exit in strategy in mind. We do still have the higher lows in this market. Briefly broke down below that $16 level today, and closed below the $16 level. I think a lot of attention's been given to 16 because it's kind of the round number, but really the bigger levels for the financials are down, near $15.60. 1540 is the bigger level of 1575 and 1540, and those are numbers that come from the daily time frame. So we have, like I said, a pretty positive looking market. It's clearly extended. We've got a broken trend line here, but no damage really being done from that trend line, indicating that maybe we just need to consolidate further through time. If you take a look at the oil market, as represented by the USO, it's starting to look maybe a little bit like this neutrality that we've seen could be starting to. We want to keep an eye on this. Oil could start begin to break out in here. It's got a weekly chart that's neutral to higher. I would say it's been neutral really for the last 6 months, but for the last year and a half, or a little bit more than a year, it's been in an uptrend. So the benefit of the doubt still goes to that bigger uptrend, and the Russell, not the Russell, but the real estate index. It still looks like it has room as well to continue up towards the mid 50s. Here we are just under $50 a share right now, and you're looking at the daily time frame. We're in an uptrend. We've got some support that's being tested right now at this 49.75 area. I don't think we're going to see the market cave in, but we have to be prepared that we are below the declining 5-day moving average right now. That's that orange dotted line. And if we can't get back up, I'd say this is more of a cautionary yellow light here, unless we can get back up above really $50.50. $50.50 kind of puts the buyers back in control. A lot of times when you see an uptrend like this, you see these little breakdowns that last for a day or two, suck the short sellers in, and then they squeeze them higher. Have to be aware of the bigger picture trend, which is still clearly higher. Markets usually don't just reverse on a dime, but be prepared for it, and be aware that intermediate term, we do have a little bit of reason for concern here with it below that declining 5-day moving average, and that 5-day moving average acting as resistance in here today. Gold, I had mentioned last week, it's just really looking like a big waste of time on the daily time frame. Weekly time frame, it's still a constructive consolidation within a primary uptrend. So these markets, a lot of people are looking for the end of the quarter to trend to reverse. There's just not the evidence of that yet. Wait for price action to confirm any of these theories that you might have, because otherwise being early to the short side is going to be very costly. But keep an open mind, and look at the market objectively. It's saying really more neutral than anything right now.